Hey Alpha fam, welcome back to another episode of Alpha Commission. Have you ever been scammed by one of these scam pumps on a Bitcoin or another asset of yours? Well, you may understand that you kind of catch them late, you kind of jump in and FOMO, and then suddenly they turn around and you're lower than where you started, right? Do you have any recourse for that? Probably not. You can't get a refund from any of the exchanges, but you were clearly scammed. What was this? Well, if we look back in the history of the price action on the 1 hour, you can see that we have a whole bunch of wicks to the upside. You can see where we have had pumps. And what this was just a liquidity grab, right? There was free money up here. People had their stop losses for their shorts in this area. And of course, they just got liquidated, right? Same thing if we look back here. You can see right here, right? There was this kind of scam wick down, and then we pumped back up. And that was, of course, there was a whole bunch of longs that were coming around this level, and of course they would have their stop losses somewhere down here. And so what was this? A liquidity grab. They liquidated all of these guys who are kind of bullish in the market, and they just grabbed that liquidity and then they went on, right? And so they did it both ways. They liquidated the bulls and they liquidated the bears. Why did they do that? I told you we were in a sideways market, right? If you've been watching these Alpha Commission episodes, you could see that we are just in a sideways market, making lower highs and also making higher lows. And so we're just jamming ourselves into kind of a wedge and just going sideways, preparing for something. What are we preparing for? We don't know yet. We're just waiting to see what the Fed has to say about interest rates this week. And if they have like a 50 basis points increase, maybe it's going to be quite bearish. If they have no increase, maybe it's going to be quite bullish. And if they do 25 basis points increase, probably it's just going to be neutral. Okay. But let's say that you're trying to play this market anyway because you're trying to make money and you're trying to not lose money, right? What's the first thing that you'll want to do? Go ahead and throw on your EMAs. In this case, I'm selecting just a couple for you. I'm putting on the 20, the 100, and the 200 just to have a nice selection there. You can see I have the 21, but you can have the 20. That's more standard. The 100 and the 200. If you'd like to stylize yours like me, this is what I have set up. Usually I have the 89 here, but I'm putting on the 100 for this strategy. So this is a strategy I developed, and I don't know if other people are using similar strategies, but I just developed this one out of my own head based upon like a daily squeeze play, except on the daily, this is what it looks like. It just looks like a red wick. There'd be no way to play this on the daily. There's nothing, there's no setup, there's nothing here to play this on these type of short time frames because you're on the daily. So these are like a day-long moves, right? So what about the short-term moves that are, on the 1 hour or the 4 hour? Of course, this works on the 4 hour also, but you can also see it on the 1 hour. So I'm going to show you both. But what you really want to look out for this setup in order to try to catch these pumps, and you see even on the 4 hour, this still is just like a flash pump. It happened within like 15 minutes, okay? That this thing wicked up here. Everyone started to FOMO in, all the shorts got liquidated, and then they jammed it back down in order to liquidate everybody, right? Well, you couldn't catch it really on even the 4 hour. So if you happen to be in front of your desk and you saw, this type of a setup, let me show you what we're looking for here, okay? Basically, you're going to be looking for bowl-like structures. What do I mean by bowl-like structure? Get out your line curve, just get it from this high point, go to your low point, and then extend it beyond, okay? Just anywhere beyond. Pull this down until you've matched the curve, and then come up around like to where the bull starts to flatten out. So let's say that you're here in price action. Let's just do a replay and show you what I mean. Okay, you just had a pump, you're falling down. Go ahead and tie something up here, and then extend this kind of a curve downward. Just put it down here around your price action where you see wicks coming down to, right? Somewhere around there. And then just pull it up to where, the average price action is happening. You can see all this price action right here, right? So you have this type of a bull. And now let's just watch what happens as price goes forward. So what's happening? You're seeing this 200 EMA it's cutting across the bull. And you're seeing this 20 just kind of chase the price action. And so right now, you can see you're flattening. So just look, your direction is starting to flatten, right? Like this was a steep decline, and now you're starting to flatten more along this bottom of the price action over here and this type of major heavily action. There's no guarantee that you can't just keep falling. But if you see this starting to be formed, and you see a slight curve up on the 200 on this 1 hour time frame, so we are on the 1 hour right now, right? You can see in the upper left-hand corner, the 1 hour right here, right? And so as you see the 20 on the 1 hour start to pull up and the 200 start to pull up, then you can start getting ready for what you might want to do. And what you're really going to wait for is for this 100, this purple 100, to meet the 20. And when they meet, then you're going to want to consider to get into the market. And this green line here, again, we just drew it with the curve tool, right? So it's not real. It's just hypothetical. We made a hypothesis of how this market might curve, and it's following it pretty well, And so this is just gonna give us a visual guide of what we're looking for. Okay, so this was kind of like a fake out, but look, they're still coming together. They're all still coming together. And here you can see the 100 finally is flattened completely, and it might turn up soon. And also the yellow 20 is starting to curl up a lot more. They're both flattening out in an upward kind of posture. Still not ready. There you go. There you go. You see how where they meet, you get this massive pump, right? And you're just watching this kind of cut across slowly, and watch where this yellow and the orange meet. Okay, you see how they crossed here? So this was the final squeeze up. Once these ones like pinched together, you see this massive, it's just massive wick where in this space, right? And so again, this is the 1 hour, so I accelerated that quite fast. Each one of these candles is 1 hour. So you had plenty of time to catch this move if you happen to be in front of your computer, right? And so what you're going to do is you're going to see, a couple candles in between the 100 and the 20. And if you're able to catch that, that's going to be pretty much your signal that you want to enter right here. You have a couple hours that you can get in on it, just a couple hours. Probably going to want to put your stop loss underneath the 20, right? Somewhere underneath here, maybe, just in case you have these wicks, right? So you can kind of see the average. You can see the average price, right? Of how far this wicks down. Of course, this one could liquidate you, but on average, you can see where the wicks are going. And so you could have a stop loss somewhere under here, just in case, just in case. But if this really is bullish because they're getting into that pinched off mode, like they want to pop up. They don't want to pop down. They want to pop up, right? And so as these things curl up and they both are pointed up, they're not going to suddenly just, wick you out. I mean, that would be really extreme. And here, in this case, you could see the 100 was still pointed down. So there was a huge chance of rejection and getting, just completely liquidated. Here, they're both pointed up or flat, right? Or this one's flat. And so if you got in right here on this hour candle, and it would require pretty good timing, if you got in on that hour candle and you had a whole hour to do it, okay, and this is again short-term trading, then you could have ridden this pop when this 200 got a positive incline on it. You see, it was negative. Suddenly it started to turn positive. And when it was positive, and also the 100 was positive, and the 20 was positive, then you got this massive up candle, right? And they didn't uncross yet, which means that you have a little ways, even if you missed this move, you have a little ways more to go. It's just at this point, you're getting pretty risky, right? Because it could get rejected by something up here, you could have hard resistance, and it could get smacked back down. So ideally, you want to catch it in this location. You don't want to chase the pump, right? Enter at your own risk if you see this thing pumping. However, you could make, if you're quick enough, you could make a couple percent off of that, right? So let's just watch how this plays out. Boom, boom, boom. See this starting to curve negatively now? That's your cue to get out. See the 20 starting to curl negatively? You might just take your profit. As soon as these ones curled negatively, you dropped to hell, okay? So this tells you right here you have a couple hours. As soon as this 20 starts to round, you have a couple hours to take your profit. Otherwise, you're going to lose it all. And you just lost it all, right? And this probably goes lower than the entry. So when you're pumping up here, you probably want to increase your stop loss to somewhere around below the 200, and the higher these things rise, I mean, you can honestly keep your stop loss underneath the 20 if you want to. Like if you just kept raising your stop loss and following the 20, like you might be, you know, you might end up, getting cashed out around here, but you entered here, so that's still a good price, right? Ideally, you want to catch this curve somewhere in this zone, but if you got stopped out here, that wouldn't be so bad. Just keep moving your stop loss up after starting it right here. And then, of course, the people who didn't use stop losses, they've already lost all their money, especially if they're on leverage, they got liquidated, and they're below water, right? Now, what's happening? We're seeing another setup. Seeing another setup. Well, look, this was a massive fake out. That was a massive fake out because look, these aren't pinching together, right? This isn't even close to this type of a setup, right? Here you had a nice steep incline, and then you were above it, right, with a positive um, slope being developed on the 200. So this one, I guess you could have been faked out by this because let's just go through the steps. You would draw something from here, look to see where the majority of the price action is, look to see where the bottom of the price action is, and then you're just gonna pull one side from the top, one side to the majority of the price action, and then pull the middle down to the bottom of the price action. You see the price action kind of bottoms out here, the middle of it's here, and so the middle point is actually the second end, and then the bottom is the midpoint of this one. That's the curve you're going to be looking for, okay? So you're looking for this curve, and let's just see how it plays out. You see, you got this, but you never broke above. Like this is the risk, right? That's why you put your stop loss right here, right? Put your stop loss right here. And you didn't get, even though you got rejected up here, your stop loss is down here, and you can see, oh, okay, I got, stopped out. So you can just get out at your same entry price, pretty much, right? I mean, and worst case, you're going to get stopped out, a couple percent lower. But you're not going to just fall down forever. But now we can see this price action is actually still widening. So this is an important lesson. Just watch the price action. Now you can say, aha, this is actually moving over this way. So you can just make a new projection. Again, you're kind of following the 20 here. Just making a projection of what you think it might do. And again, each one of these is an hour. So you have a lot of time to be thinking about this, right? This is the 12th, and this was the 10th over here, okay? You had a couple days to be thinking about this. It's not like you were on the spot or anything. You're just watching the 20. Start pulling this up a bit. And then look, this is getting closer and closer. So around this time, right, around on the 13th, you might be thinking, these are going to meet. Now there's two possibilities. Look, this is a negative crossing, and this is a positive crossing, right? Well, actually, this is a negative because it's pushing it down, but it's positive for our strategy in that you want to be in this area, right? We want to be in this area. We don't want to be in this area, right, while we're doing it. We don't want to be in this area because this is a squeeze to the downside, and this is a squeeze to the upside. And so what we want to do is we want to be in this area. So if this suddenly came down, we would have a crossing that, would start looking like this, right? Because the yellow would end up flipping on the top. So you might be very hesitant here because this is negative and this is negative and this is just kind of neutral. So you're very hesitant here. So we're going to just keep watching a little bit longer because we don't want in on this. This is negative and this is negative. We really want the purple to start, the 100 to start getting a little positive slope on it. So we're just chilling, not doing anything. Yep, we would have been hit pretty hard there, right? Would have been hit really hard there. So we're just still looking, just still looking. And by the way, the longer this goes on for, the more energy is being built into the system. So we're just chilling and watching. Okay, it's coming back up. So this was just to like fake people out and kind of liquidate them. Look what's happening here. You got a positive one here. You could have entered on that and gotten another one of these little mini ones. But, you know, you can decide, right? You would have to have your stop loss here so you don't get totally killed if it just suddenly slams back down. But you could have taken this one as soon as these started to come together. You could have taken this, and again, this takes place over hours, so you would have time to get out if you saw this turning negative. But really, this wasn't the type of setup that we were looking for because look here, you had one candle, two candle, three candle, four candle. You almost had five candles above the yellow 20, right? So this isn't an ideal setup because you had no candles above the 20. You just had this massive pump. So I consider that kind of a fake out, okay? I personally wouldn't have taken that. But if you saw these two come together, you could try to take it. It's just this purple had a negative slope and this yellow had a negative slope. So even though they squeezed, it was just too fast. You wouldn't want to take that trade, in my opinion. There may be a lower time frame, like the 15-minute, where you could have taken that trade, but that's just too fast for me. I like either hourly or above. So I'm just chilling, just chilling. I wouldn't have taken that trade. Just still watching for something to happen. And here we go. What just happened? What just happened here? Look at this. We have, one candle, two candle, three candle, four candle, five candles appearing above this 20 here. And you also have it like approaching the 200. So these are going to like probably pinch together. And the bull shape is suggesting that we might go up. You're just seeing this flat, price action here, kind of just rounding along in this bull. And what happens when that bull finally rounds up? I mean, either these cross negatively and we just like flop over the side because they just like cross negatively suddenly, in which case you have your stop loss, or they squeeze to the upside. Boom. Right? You saw that, right? Boom. You had these candles building up between you had one, two, three candles right here, on top of the 20 and on top of and it retested the top of the 100. And then you could have taken that entry right here as soon as it started rebounding. And then just taken this trade up the entire way, right? And then as long as it didn't come back down and break under the 20, because your stop loss is going to be trailing underneath the 20, as long as it didn't break under the 20, you could have followed it all the way up here. Now you could have taken, your profit as soon as you saw it turning around, and that would be smart. That would be a smart like take profit, but you could have left some in just in case we are just retracing bullishly. And then you could have ridden it up here. And then when you started to retrace, of course, you'll want to get out. And when you have like one of these flash wicks, you can drop down to like the 15-minute because you don't have to stay on the 1 hour. The 1 hour is just for the setup. You can immediately, after you enter, you can enter the 15-minute or even the 8-minute, and you can start to see if you retrace, okay? And if you start to retrace, you can just take some profit if you want, because you're already way up in profit. And then if you took your profit, and you're at least break even, then you have nothing to lose. You could stay in it if you're bullish, or if it keeps dropping, then you can just exit, right? And that'd be a perfectly fine strategy. So you can kind of play these pumps, but what you don't want to do is just, see the pump on the daily, or the 4 hour, or even being on this 1 hour. You don't want to just like chase it because it's pumping. People can say, "Oh, Bitcoin's pumping. Bitcoin's pumping. Oh my God, guys, Bitcoin's pumping. Did I miss my chance? Did I miss my chance to buy?" And then you buy here because that's exactly when they turn it around, right? That's exactly when they turn it around. That's when they try to liquidate you. That's what this is for, right? And they do it to the downside and they do it to the upside. And now we're lower than when most people would have tried to FOMO in on this pump, okay? So that's my strategy for the 1 hour. I don't usually play the 1 hour, but that's my strategy for it. And again, like you might take small losses if you get faked out on these like mini fake out pumps, but then you can do pretty well on the actual pumps. And again, if you keep your stop loss consistent, then you shouldn't be much different than your entry price anyway. Whereas the payoff can be pretty good, right? And just some small losses, they don't matter. And by paying attention to 3 EMAs, you can kind of understand if you're in a good spot or not. Again, there was a little risk here. There was a little risk, right? But you did have this neutral to positive slope here. You had a positive slope and a positive slope, so you could have entered on this, just on this crossing. You could have entered right when it was above the 100. We had a couple candles above the 20, and when we had a candle above the 100, and this 200 was flat or slightly positive, it does have a slightly positive slope. You could enter and just see what happens. Quickly move your stop loss up as this price goes up, and then you can ride it out. Don't want to take too long. That was your alpha for the day. Stay safe, guys, and happy trading.